All right, welcome everybody to the Bookmap. Oh, this is the Bookmap. Hold on a minute here. I got the wrong one. All right, it's the Academy. Here we go. Okay. Welcome to the Bookmap Academy meeting on Thursdays. So our agenda here is to go through your trades that you've posted in the Bookmap Academy and in your spreadsheet as a member of the Bookmap Academy, and then to open up the mic for you to explain your trades, and then we'll give feedback from the coaches here. So if you're interested in this program, go to bookmap.com. It's free. There's no cost to it. You'll just go to bookmap.com, go to the More button here, and then Bookmap Academy is right here. Okay, and you can sign up here. You can go through, read the process here. You can get Bookmap for free. It's a stepping stone or our pathway to becoming a coach, a streamer, etc. So we're willing to help you out along the way as you build your trading edge or portfolio, or playbook, I should say. Let's go through the disclosures and we'll jump in here. A general disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is our process here for the Academy. 1, 2, and 3 up here are not part of your trade markups for your journaling and your content. However, you should have this perspective, and you may make a note on your markup. The impetus: what's moving the market? Well, I mean, very clearly we know we have a lot of geopolitical concerns right now, and that's moving the market very clearly. Higher time frame key levels. Well, we want to understand if the market's moving, where is it going to move? Understand these key levels, and then we start to develop scenarios and strategies around those key levels. Very simple stuff. I mean, if we see that we're going up to a key level, the news is bearish. Well, you know, you're going to start to look for mean reversion or reversal type of patterns, and then you're going to select the proper setup, which is number 4. And that's what you're going to journal in here into the Bookmap Academy. And you have a checklist. You're going to be able to grade that checklist, and you're going to be able to determine the sizing and the risk that you want to take on that trade. Like, for example, now you're probably going to want to widen out some stops. You're probably going to want to trade smaller size. It's more volatile. So these are some very simple things, and then it comes down to the order flow. Look at the order flow to give you the insight to execution and your trade management. All right, now the Bruce's pilot program is a subset of the Bookmap Academy. We focus in the pilot program on building a trading edge. Okay, that's really the goal here. What I've come across over the years is most traders don't have an edge. They're not trading with an edge. They know the setup extremely well, but they don't have an edge. They don't know how to create an edge. So they just randomly start taking trades, what they think based on the setup, and that's no way to trade. In here, we're going to go through a process. You will build out and define an edge for yourself with the structured process that we teach. All right, very fast method using replay mode in Bookmap. And that's it. Let's jump in here, and let's start off with, I think, David, and you've got TD, so we will start right there. Hold on a minute.
And they're with us, I can see. That's fantastic.
And he is here, so let's jump in. All right,
beautiful.
and
So
add him to the stage.
Lovely.
Okay. Just a second. TD, we're getting there. Okay, there we go. All right, welcome, and walk us through the trade.
All right. Hey, everyone. How you doing?
Good.
Very well yourself.
I'm good.
Excellent.
All right.
So I've got two trades here from yourself, just while you get familiar. So we've got a meta trade on the long, and we've got AMD on the long. First of all, thank you for doing these posts. Really nice to see. Great checklist in here, Bruce, as we're about to see really clear charts. I assume we're on Eastern time, if
Yes.
I'm right in thinking.
Yeah.
On that. Really simple setup, simple but deadly. Kiss trading setups, where we go here. But yeah, walk us through, and we can all chip in. Thanks.
Okay, great. Yep. So it's the the trend line break accumulation. When I saw this kind of developing, you could see three liquidity levels, passive liquidity levels. One at the box at the top is stronger than the others.
Yeah.
So I rated it a 6 because I've seen stronger, basically. So it when I compare other setups, it was not as good, I would say, from that standpoint. And so that's why that's a 6. And then the key time frame was the regular trading hours high from yesterday, marked with the green line in the number 2.
Yes.
Then you've got the break of the trend line at number 3, and then after that, drop in price where you see the passive accumulation, you see the aggressive buyers come in.
Yeah, you do.
And then the other thing, so I'm seeing that happen. Then the other thing I'm just seeing in general is it just, and I'd be curious to get feedback on this, it just appears to be an imbalance book to me at this point.
It is. Yeah.
Where I marked with number 5, the line at the top and line at the bottom. After I added this to the chat, the other thing I should have mentioned too is there's just other passive liquidity on the sell side building up below that too, whereas there's really nothing meaningful coming in on the buy side.
Right.
Okay.
And then even to like where the arrow is on number 3, that arrow's pointing to the big red dot. Just to the right of that, there's a little pocket of passive liquidity that showed up on the buy side, just to the right of that yellow box. But that even got cleared away, to further to the right, the other way.
The other way to the right. Yeah.
The passive liquidity,
Got you.
even that cleared up. So I'm just seeing what appears to me like a imbalance in the book. And you get the confirmation of the aggressors coming in, and at that point, I'm just waiting for a pullback to low volume node area.
Yeah.
And pullback with low selling in the volume. So to me, that this kind of met all the criteria for that.
It did.
And so so I entered in at number 6, just set a buy. I've been doing these setting the buy limit order and just letting it hit it, and then I had my target set, and so I knew where I was kind of shooting for there, and then my stop at number 7. So it was a pretty high risk reward trade for me. So I kind of even though number 6 wasn't great, there was just, I think, and I only had this rated as an 8. It's just that imbalance in the book really kind of swayed me to be confident in this trade.
Yeah. No, it's beautiful trading. So well done. I know John's going to help me a lot on this, because you will, John, on the liquidity ahead of that. This is, if I say, the thing I'm saying pretty much every week now, so I apologize, Bruce. We're either selling for 1 minute or we're buying for 1 minute, and then it just 180s. It 180s at that 650 level on a dime, literally on a dime. And in a moment I'll show you why it was, but it's at that number to start with, that 650 level. It does on a dime. We're selling, we get down there. That early market thing I always call a price gouge, and I think Tom does as well, or something similar. As you've identified, you've got the imbalance, you've got the liquidity above as a possible direction of travel. So let's take the price down to get a better entry. Not you and I, you know, the market makers, whatever. They're taking that down. They're gouging the price. They're filling their boots, and we can see that. And then they start to buy. And that line going up, Bruce, at sort of 45 degrees, if you were sort of marking the chart on that, I often describe that, again, repeating myself all the time, sort of like machine-led buying, ML buying. It's like bit, all, that's it, all the way up. And you've got the vol bars with you all day long. You know what you're doing. If I can go to a cheat sheet, Bruce, sorry, if you can close that chart. David, you're a pain. and if you can pick up my option chart. I just want to show the TD really why you had it all on your side. So it's just, if you let that one go in, Bruce.
Oh, it's down below? Okay.
Yeah.
Yeah, got you.
Got you, yeah. So this is an option chart for Meta for the day. That 650 level, apart from being, if we had Trader HE with us, he'd be reminding us about these numbers, as you will, Bruce. You can see on the far left, appreciate small text, Bruce, but it's a key gamma strike area. That 650 is a key gamma strike. And just to align everyone, the white line on this chart is the price, yeah? And the orange line are the calls, if I got that right, and the blue is the puts. But what we can see here, the price came down to that key gamma strike area at the 650, stopped in its boots, and very quickly, you've got the orange line, which is the call buying, has gone vertical, and it's gone vertical ahead of the price action. Now, John, I'll throw it to you because you'll talk about this all day long. John, talk me through, please, John.
Sure. The orange line are the calls, and they are the next expiration calls. So there are the calls that are going to expire next at the end of the week on Meta. So they're buying the near-term calls. The others, let's see. So you're only plotting 0 DTE, right?
And this is quick. This is on like M 5.
Okay. So that's important to remember. These are not all the expirations, but it's the nearest expiration. And that's what lots of times that's what creates the urgency, because market makers are going to have to cover if prices start to move in the direction that these calls are being bought. They're going to have to buy. So this is hedging participation in here. And it was the move to the upside was the catalyst in this stock that day. Right from 650. That created the move. That created the urgency to buy, and it rallied from there. Yeah.
So perfect. Thank you, John. Appreciate it. Well called. If we can go back to the Bookmap chart, please, Bruce.
So wait a minute, John. If you can, or if you both you guys can explain a little bit more in depth here. So the white line is the price. The orange line is the calls,
the call buying,
the call buying, and then the blue is the puts. So both puts are moving up, but calls are moving up and are a lot more volatile.
A lot more. What this is showing is that on the call side, calls are being bought
before the price really moves.
Puts are being sold, but not as much. So the influence is bullish.
So how do you say puts are being sold here? They're going.
Puts are being sold because the blue line
aren't they being purchased? I mean,
no,
I'm a little confused. I mean, like I know that you're short if you get a put, of course, but like, what's when the puts move up here? What does that mean on this chart?
People are getting out of puts. They're exiting their puts. They're going away from their puts.
Okay.
But
which
I know
means
I
the
get
market
confused.
makers can take their hedge off.
Got you. Okay.
I get confused as well, Bruce, when we say we're selling puts. You think, okay, people are getting in. No, these are people walking away from their puts. I don't want these anymore. Get them off. Take them away, please.
What these lines measure is the bottom line influence of the option activity. So on the call side, represented in orange, calls are being purchased. If the blue line were going down, that would mean that puts were being bought,
purchased,
and the market makers, makers are exposed. It's just showing exposure of what they can expect they're going to have to do to balance their portfolio and keep it neutral.
Got you.
Okay.
Okay. Wow.
Yeah. So not a signal service, Bruce, as we'll always say about anything that we look at in
Yeah.
the academy. But
Yeah.
as you're doing, TD, this is why I want to show this, where you've brilliantly picked up the signals. And this is, as I can see, that's a real trading chart. So well done, respect, sir. That's a real trading chart. You've spotted the level. You've got the liquidity. You're choosing your entry. But behind you, that you weren't aware that the other side, the gorilla in the room of the options market that is pretty damn big, beasting away, and people are buying call options. And as John's reminding us, that then means the dealers have got to start hedging that. How do they hedge it? They've got to go into the market and buy the meta shares. So it's fuel on the fire. Yeah.
Mhm.
And these are you're showing longer dated. These are longer dated
No.
options, not.
I
Well, on
show.
the top right it says
I
all
think
trades
both at
selected
different
on.
times. Yeah.
Next expiry is selected off. So all these are longer dated options here too.
I don't know how he's got his colors.
Yeah.
On the top right, you can
I-
see the tick. It says all trades is clicked
Yeah.
on the top right. And then next expiry, yep, is ticked off. So these are like longer dated options here.
Okay.
Yeah, right there where his mouse is at.
Good spot. Yeah. No, sorry, my bad. Yeah. But I do, as John's, because John sees a lot of me different charts. I do toggle between the two, so that's why John rightly is saying, which one are you posting, David, or showing?
Yeah, I toggle between both too. It's the
Yeah.
liquidity though is so nice to see on the DX feed on Bookmap. It's just like you can actually see it responding. If you go back to that Bookmap chart, it's just the heroes is one thing. Like seeing these options flow is one thing, but actually seeing like the interaction on the
That's it.
liquidity, like what TD showed here, and then the buyers stepping in, the delta's going in. So the aggressive buyers are coming in after that sell, after the sellers go through that liquidity. Really good.
Yeah.
I like that.
Beautiful. Yeah, no, it's a great trade. Great trade.
I need to get me some DX feed, man. That's pretty clean right there.
It is. Yeah.
Okay, here we go.
I'll try it.
Yeah, that's the one thing I've really noticed with stocks. The like the Mag 7 in particular have a very clean heat map.
Yes.
Compared to the futures.
Yeah. They do. So no, brilliant trading. Bruce, should we throw the ball back to you for a bit of Monday morning stuff, please?
Yeah. Well, in fact, as I wrote to you guys in the coach's room a little earlier about this option stuff, I mean, like this is, especially during these times of volatility, these are just massive drivers. They're always massive drivers, but like, look at this mechanical buying, like you noticed. They just flip on the buying algos, and you'll see them accumulate. You'll see it methodically accumulate in the live order flow as it unfolds. These kinds of moves in here, like it out of the blue, it kind of disrupts all the technicals, you're kind of like, what the hell was that? Now we have insight to it, it's incredible. Like there's all sorts of things that you, David, John, well, all you options guys, like you see these things day in and day out. Starting to understand this, I think TD, you put the pieces together really well, noticing all of the liquidity up here, but and also the accumulation down here. This one is a little kind of suspect, to be honest. Then I like this one, but you said they pulled it. But anyway, you're at a key level, like you said, the 650, right? That's going to be a very key level because it's a big round number there, and there's always a lot of option stuff around those levels, typically. But there's just something that I really like in here, and that is, I think this is a really, really good example of when we talk about the aggressive accumulation. I see it, at least. I love it. Like this right in here is golden for me. I know that there's a bunch of buyers in here. Now, if they can just get above here a little bit and start, kicking this off, it should go.
Wheels up.
Like, yeah, I mean, I typically like to see it kind of back up above all of that selling up here. But like, this is the kind of like aggressive accumulation we're talking about. It kind of goes back and forth a little bit, but they're accumulating. It's just not, it hasn't moved yet. And you put that together with the passive accumulation at a key level and the break of the structure. So yeah, really nice stuff there, TD. And you notice the targets as well, where you want this to go to and drive to. And you made like a $10 trade out of Meta.
Right.
Yeah, nice job.
Really good. And roll on the summer, Bruce, with the futures for stocks, if I say that right.
What's that?
Roll on the summer when we're going to have the futures for stocks.
Oh, that's right. Yeah. Exactly. DNT, you look at a lot of this option stuff, so please, love to hear your comments.
I think that it's you could look at the hero and the options and stuff like that, but really the looking at the heat map is the second half to the story. I think it's really nice to have the heat map here too. It's like you have one half of the story, which is like the options game, and you can see them rolling in and the options rolling in, and the key levels that Brent does. He highlights these key levels and uses his options tools to really kind of like identify these levels. Really nice. And the levels in confluence with the heat map, though, it's like it adds another level. And TD's not really in the pilot program, but he's using the trendline break accumulation variables, not variables. The top left, you see 1, 2, 3, 4. Like you see the passive accumulation, the key level, break a structure trend line, the aggressive accumulation. So he's using these things that create support and resistance in the market. So you can actually see it in the heat map. It's just it's really putting all these things together, and really TD has really brought all these things together in this picture for us, bringing the support and resistance into play, so we can actually see those things, support and resistance, playing out in real time, and then the options levels kind of playing out secondarily. And it's, in my opinion, and it's just really, really beautiful. I think it's bringing two stories together really nicely. I haven't really traded stocks myself, but I was considering doing it. I would need the DXV data, but when you're looking at this, it's pretty clear. I mean, you have everything here that would make up a trade. Even in the indexes, you have that aggressive accumulation, that passive accumulation, that key level, the break of structure. So you have all this stuff that's already here. I mean, it's really clear to me.
Very much.
But nothing on the options, DNT.
I didn't see your message. I know you said you sent a message. I didn't see your message about any options. So I didn't.
No, I mean just like in general, because I know you look at them.
Yeah, man, it's hard to do. It's hard. I think it's hard for me to do the options alone, without the heat map. I don't know like if you guys agree or not, but you can kind of tell like what's going on, but without the heat map, it's like you're missing a second half to the story. Kind of hard to tell like what's going on when you're just looking at like a bar chart, for instance.
Yeah.
I don't know if you guys agree with that.
Yeah, I would do. I use the options as, I call it a secondary. So let's say I was looking at the meta trade here, TD. I'd be all over you here in terms of your setup, perfect. If I was looking at the meta options chart, and let's say it was going the other way, it would not mean I would not take this trade. It would just mean I'd be a little bit more cautious on how much I'm putting on, a little bit more cautious on my stop placement, be more aggressive in my stop movement. But having seen the options is on my side, I'm not picking a fight with a gorilla, as I've said many times before, gives me confidence with that confluence to go at it more aggressively.
Yeah.
Mm-hmm.
TD.
Yeah, I'm gonna have to. Oh, sorry, Bruce.
Yeah,
I was
would
just gonna
love
say
to
I'm
hear
gonna have
from
to
you.
check that out. That software. That was what was that?
That was on that spot gamma. So that's the, I think I'm going to say it's the alpha program, John, isn't it?
Yes, it is the alpha level. Yeah.
Alpha,
But really what you have here in the order flow is beautiful. I mean, I think it's a great trade. And what marks the line in the sand for me are the volume delta bars. Because you can highlight where the selling is and you can highlight where the buying is, and that transition between the two, that's your line in the sand. And it happens at 650.
It does, doesn't it? It's night and day. It
Right
really
there.
does. Yeah,
There you go.
Yeah,
All that selling coming in, they turn it off, and now it's all buying. And now you layer on top of that the options starting to buy to the upside in a pretty significant way. In my work, I want all of it. I want a confluence between the options and the order flow. My best trades come when everything lines up. But this is great what you're doing here, and you can see that as the trade progresses after the 10-15 mark, more liquidity is being added above into the market, showing intent, and it's building all the time. And then you see the calls rallying to the upside. So, you're your maximum adverse excursion, that metric that we use in the journal. I mean, it's non-existent here. You never really felt any discomfort in this trade, and they're the ones I like. And this goes $10. I think it's wonderful. And I can see what you're saying, though, as far as passive accumulation being rated maybe a little bit lower, but I agree with you with the liquidity picture and with the transition of selling to buying. I think all things considered, it's a great trade, and I would put it in your folder as a great trade and look for it in the future. Yes, sir.
I totally agree, John. I mean, especially due to everything we've talked about, but also just that one key thing. Well, two key things. First off, the transition, like you said, from sell side to buy side at the key level. But then this kind of, this is a great example of what David said about that algo-driven buying. I mean, it just continues, and when you see this, you'll see it, unfold live, and you don't want to go against it.
No.
It is just
ruler against it, as I say. Sorry, but it's that line. You can just see it. Yeah.
And there's just and it's kind of hard to. There's not even pullbacks. It just kind of. It just goes.
Just goes.
And they just keep on buying and keep on buying and keep on buying. And it's hard to, like, if you're like, well, I'm just going to wait for the pullback to here, it's like,
good luck.
Yeah, you don't get a chance. So keep an eye out for it. I try to keep an eye out for when this kind of happens, and it's like, okay, it's worth it then. I'm going to take the risk. I'm not looking for a pullback. And then I think, bigger picture stuff, I was kind of excited today about some of the options things. This is the behavior of how these guys are hedging their options. So here it is, right? So look for it. You see it. This is the footprint of it, the stamp of it. Anyway, yeah, great example, TD. Thank you.
And I would encourage you, TD, to keep working on the stocks, because the futures are really really erratic, and we're not seeing this kind of thing. In fact, you talked about clarity. You're right. On the stock side, there seems to be a bit more clarity in the heat map footprint, because I know, trying to trade the futures, I'm looking at things like the SPY for clarity, because I'm not getting it, looking at the futures because they're all over the place. So I would encourage you, keep working at the stocks. I think it's the way to be right now. And with the movement, I mean, you can't beat it. So yeah, well done.
In the chat,
I
TD,
just
I've put the link for the app that John and me are using, or the platform that John and me are using. You can see that there.
I just mentioned the same thing that John just mentioned. It's the index is just crazy with the crazy with volatility and everything. I was considering going to stocks myself.
Yeah.
And I agree with that. It's kind of funny that he mentioned it too. So what key levels did you use, TD, here?
650 here.
Yeah, it was
What did you
the
pull that from?
previous day's high during the regular trading.
Okay, so you're pulling your key levels from just market structure.
Right. Yeah.
Right.
What I've been doing
Okay.
is just marking. You see there's a gray horizontal line at the very bottom of the chart. That was the close from the previous day. So what I typically do is I mark regular trading hours, high, low, and then close, and then I'll do the same for the extended hours. But I'll just do the high and the low.
Mhm.
And then the other
I like
interesting
that,
thing I've seen, I haven't started using it. I'm just trying to take note of how much it correlates or creates confluence with all these other things. Is there's a person named Vinny who talks about the fair value gap, and
Oh yeah, we all know Vinny.
yeah, seems to be pretty good. No, it's not perfect, but it's just another interesting thing I've started to put on my charts just to kind of observe it at this point. But there does seem to be something to that as well.
Yeah,
I see him
I would
trying to get it.
for the fair value gap, we're coming out with a new the low volume pullback. It's essentially it's similar. It's different though. It's really what we're looking at, and we're going to put into much more context is the low volume pullback into a low volume node. And this is auction market theory. It makes sense. There's a lot of reasoning behind it. Is that this is where price rejected previously. So we're looking for it to reject again. TD, we'll go through the details next week on this. Looking forward to covering some of that for you.
Okay, great.
And the reason why I was asking was because about your key level was because the hero that we were just looking at just now is part of the spot gamma alpha sub, and I don't know, I had a question. So David and John, did the key levels for stocks come with just the regular sub, or do they have to have the key levels, not the hero? Can you just get the regular sub for the levels for the stocks?
There are 3 tiers, 3 subscription tiers. And for the key levels, that's going to be in let's see, David's going to be number 2, I believe. And then Hero is going to be in tier 3, the alpha level.
Okay, just look at if you look into it, I just recommend looking at maybe the key levels. If you were looking into it, since you were the one that mentioned it, I'd say that because I'm not too sure. The hero adds a huge layer of complexity, especially in the indices. So if I like the way you're doing your key levels now, but just keep in mind, like Bruce just mentioned, adding more complexity to the mix can make it contradictory at first, because it takes a long time to understand these things, and you're adding a layered complexity that might take years to figure out. So if you do something, it's might be better to start small and then expand out. Just keep that in mind.
Yeah, that makes sense.
Okay.
Because you already have the heat map, you got the ideas of support and resistance, like, and you keep building on these ideas of support and resistance, then you see them in real time on the heat map, and you have the key levels in confluence with the levels that you're already doing with market structure, going back multiple days or whatever. That's, in my opinion, all you really need sometimes. The hero adds that, like, that other level of complexity that might kind of take you out of trades, or it might be a little more difficult. Just kind of look into that if you said you were looking into it anyway. That's just my opinion.
No, it's a fair. I mean, I'll chip in on that, as John might as well. Sorry to wang on about it, but there's many days, John, you see that with the option guys, where you and I are, let's say we're going long, and everyone else is determined to keep going short because the options are telling them to be short. And you and I, we're looking at the order flow, what's happening on our heat map. It's like, come on, it's clearly bloody long. Why are you trying to short this market? But they're some people are so wedded to what they see on the options market, that's all they want to get into. So it's got to be the confluences.
Yes. Here. Yep.
Yeah, I'd just like to add one more comment. TD, way to go. I mean, you haven't been in here long, and you're listening and you're adapting to it. Like we talked about maybe, considering moving up the over here, the volume, a delta bar.
Yep.
You did that, and look what it did for you here. Sell side, buy side. Beautiful. Just beautiful. So way to go, man.
Definitely.
All right. Thank you very much. Yeah, just back at you all. This is due to your feedback, from all your coaches. Like it's really working. And like you said, Bruce, like when you hit the buy button, you feel like you got the edge, just with this setup. So thank you. Thank all coaches.
Oh, well played. We've got AMD next. If you want to have a couple of words on that, TD, with Bruce.
Yeah, let's move over. Which one
is
is down here?
Yeah, it's the one. Yeah.
All right.
I wasn't able to get the options chart up on this one. Dashboard was going around in circles. Maybe John might have better luck when I try to get AMD up for this date. But if you want to talk us through this one as well.
Yep. So, this isn't the trend line break accumulation, but Bruce, you do talk about wedge patterns. Like, I think there might be one or two setups you did videos on. So this is sort of trying to take a lot of the, maybe not exactly the setup, but the concept I'm looking at here is you see a lot of sellers coming in with those red dots. So to me, what I'm basically started thinking about is I'm looking at the liquidity map, and again, this is like something that it just seems like there's an imbalance in general towards upwards, and so then I see this wedge forming, and I started thinking you start to see a lot of the sell aggressors with those red dots, and then so I'm starting to think those could be potentially trap traders that could be fuel to the upside. And then you get that really strong move up, and there's really no buy side liquidity following it, but yet you see sell side liquidity being added. So at that point, start to feel confidence in the trade, and believe on this one I identified like a low volume node area where I just set a buy limit order at C, and it did pull back against me initially, but I had a fairly wide stop on this one because, again, the target I identified, it was still like a 2-to-1. So that's kind of why I felt a little bit okay doing a little bit of a wider stop than I'm typically doing. But let's see, and then yeah. So and then when I get I just this one usually I'm kind of like always moving my stop up to these pivot points. And then this one, I was just like, let's just let it get there instead of bringing the stop up, like, so.
Very nice. Yeah. I mean, for me, if I chip in on we got 9:30, market opens, it scoots up. Laura's within the audience. So Laura, I'm thinking, albeit this is in futures, I'm still thinking ORB, the opening range bar, not within market profile, just within that first 1 minute of action. So the price scoots off it goes, starts to come back down, and you're rightly identifying a pattern there. That level that you've got at D, the sellers cannot get it below that, and that's likely possibly within that first minute, Bruce, within the ORB, and it's coming down to that opening print, that ORB level, and it's just they're not able to take it any lower. And then we look at the vol bars. I appreciate that's within the first 30 minutes of action. They're all green. A little bit of red in there. It's just all buying. You got the liquidity building up that John's going to talk about. You rightly identified as E. It's getting fatter, and then the 201 levels also getting fatter, and off you go. It's the sellers have had a go and not able to get it down below RB, and the buyers are clearly in the game, and off they go. Yeah, John, your turn, sir, please.
No, I really don't have much to add to this. I feel, like I said, the liquidity is definitely above the demand liquidity. Get a little bit of a pullback with the liquidity coming in at 196, which is to be expected. You can count on it. Exactly. Right. So just around 1045 or so, you get that little dip. They buy at 197, and then you're back up to 200. But that liquidity really helps me to identify potential moves. Because there's a community of people that are saying, hey, I think fair value is at 196. Let's see what the market does. And the market came down to 197, didn't quite get down that far. So that's when you can anticipate those little pullbacks and not freak out, and stay with the trade. Because the intent, the majority of people trading this market today believe fair value is at 200. And they traded to it.
They did. To the dime.
Yes.
Beautiful. Trading. Simple, deadly, effective trading.
Yeah.
And not choppy as the indices.
Oh gosh.
And TD, like I was mentioning, that you're right about this is very typical. Like, kind of usually it's your opening range kind of happens before 10, and you get the big move up, and then you get the chop from 10 to 11 ish. But in here you got the chop kind of, and then it moved after 10. Nonetheless, like it chopped here. This is what see your profiles in here. See the amount that traded down here, over here. Not much, right? And now it's building. Okay, even if we, this isn't a bad profile here, because, like, I mean, you can see that. Look, basically, let's just here. Let me do this. Okay. All of this bulk of trading in here, all this back and forth is going to build out a profile, right? And there's going to be a profile down here as well, right? Especially here with the open, because that's where the volume is trading, and then it broke and it moved very, very quickly. In here, it rejected. Okay, there's not much trading. No one's really interested in trading there. So when it comes back into that area, you want to see if it rejects again. Sometimes it won't, reject, and sometimes it'll go in and fill in this area, and it fills in this profile in here, and it explores this price area in here. In this case, it rejected and it went higher. So, and then it comes down to when you see those aggressive buyers come in, like you're seeing in here, it's like it's all about, like, looking for your targets, your high liquidity on the way up, and you rightfully did so. You saw that Imbalance. I love that, hearing that from you. You're looking at that Imbalance. When I first started at Bookmap, this one guy who trained me about order flow, mentioned, well, he had me read a whole bunch of like white papers and books on pretty advanced stuff in order flow. And then he kind of questioned me on it and everything. And
That's good.
basically, the way that a lot of these banks and institutions were trading is exactly what you just mentioned. They're not even looking at volume really. They were all about the imbalance in the order book, all of it. It was all forward looking, and like, where's the imbalance, and then where's going to be the fair value, and you know, you're seeing it on a bigger scale in here. I mean, they were talking sub-second levels basically. That was the high frequency kind of era, but like the same concepts hold true on these higher time frames. So once the aggressors want it, this is where it's going to go. You know, these areas of where the sellers are, the high liquidity. So nicely done again. Anyway, more stuff on this with wedges and stuff. This isn't it's a low volume pullback, absolutely. You know, I mean, I don't see much selling in here at all.
Right.
It's not. I mean, the ones I've been covering with you guys, we'll define them, but I'm usually looking at pretty quick pullback, rejection immediately, and then continuation. In this case, it's more like a wedge, flag, whatever. I don't, you know, they're all the same concepts. But anyway, nicely done again.
Very nice. And do you've heard us talking, and I'm sure you're fully aware of the opening range. Do some schoolwork on that to understand a little bit more about that. It is a key zone, key area that quite a lot of us traders play into, don't we, Bruce?
Yeah. I mean, you especially love those opening. You and Laura. So
yeah, Laura.
Yeah. Good stuff.
It doesn't come back to that opening range.
No,
it goes one direction, right?
Yeah.
So that's one piece of information, and that's a really good piece of information. That's something that I've been telling the pilot people to do too. It's I mean, for everybody, we should all know this stuff, but we don't really like know this stuff, right? We should, but we don't.
Yeah.
It's maybe we all need to read a book, like Bruce said.
Yeah, because I've had 3 or 4 dips of this opening range here, and it's like, all right, swear your head away as a sailor, like, give up. All right, the buyers can have it. Right, all right, your turn. From D, your turn.
Exactly.
I'm going home as a seller.
Yep, it's one piece of information that's easy to forget. Getting caught up in that volume, you're just seeing all this movement, all this volume going through. You want to jump in, but the thing you need to remember is sit back, see what's happening. Look, what did the market do when it opened? It didn't push up and down. It just pushed up, and that's a drive. That's an opening drive, and it starts to chop a little bit up and make a small flag there, and it's showing that it's going up, and you get a break above that previous swing high where it impulsed initially at the open, and then it pulls back to that high volume. So executing at the low volume node, which is kind of like what I think TD mentioned, where he entered and it pulled and went against him. You don't know if it's going to hold that low volume node and keep going. You can zoom in and try to be patient, but you can anticipate that move to the high volume node, and then that high volume node we would anticipate to hold, and then it just launches off. So I mean, if you miss that entry, you'd have to enter as it pulls back into that high volume node, and it impulses up again or shoots up again, and it breaks that previous swing, and then but you get that pullback again to the high volume node, and that would be a potential. It just keeps telling you the one was the opening drive, and then next it keeps making these higher highs, and it keeps making these higher highs, and then it just keeps holding them. So you're getting some really good information from what from what David had mentioned about the opening range, and it's like the low volume pullback is really nice to enter if you're anticipating this thing to go into an imbalance, or if you see that it's already in an imbalance. And it's kind of telling you from the open and that wedge pattern that you're talking about, and that it's holding that high volume. So it's just keeps trying to test higher and test higher and test higher, and where's the obvious place that it might test is E, your high volume. So you're looking to participate in that imbalance on those pullbacks. It's really good. I like this a lot.
Yeah, so beautiful $2.5 trade. Well played, sir.
All right. Any other comments, or TD, if you had any other questions?
No further questions for me. Thanks for everyone's feedback.
All right.
Sir. You're welcome.
All right, let's move on, and let's see. Okay, let's go over. I think, John, you've got a few different guys here.
Nice.
Let's see who's in the audience.
My other
I don't
one's
see
Vintage
Daniel.
Trading, but they're not in there. He's not.
Shoot, what? Got a bunch of Daniel Rui ones.
Yeah.
But then
He's not.
who else did you have? You also had
DNT. I had a couple for him.
right, coach the coaches. So let's go over DNTs. And hold on a minute here. I don't have it up. I need to go get it. Okay. How did I miss? Okay. Oh, it's down below. Got you. Okay, I got it. This one and oh god, I'm all over the place today.
Oops.
This one. Okay. Okay. So we'll start with this one, DNT, if you want to kind of walk us through, and then John's analysis.
Mm-hmm. So there's a trendline break accumulation, markets pushing down. I outline a horizontal structure, and luckily in this structure, the trend line structure had already broken. Now I'm just observing the horizontal structure here, and it picks up that heavy volume, number 4 that he outlined there, and which is a breakdown. Then it breaks the structure up high, and then it pulls back to the high volume, and that's where I entered those as it's kind of pulling out, and I'd put my stop outside of that horizontal structure that I drew. Ideally, I'd probably have to put it a little bit wider just in case, but luckily this kind of just started going in my favor right away, and it was looking really good. So I extended my take profits up higher. To the liquidity at the top, you can actually see almost at the top of the chart, those offers are being added. You can see they're stacking those offers on the top there, and they keep adding more offers on the top as the as the horizontal structure is kind of developing itself, and as the buyers are really starting to step up, and it's almost starting to break out. Yeah, those offers just keep getting stacked up there, and that was a really nice nice to see. I might be able to extend my target up, and where can I trail? What can I trail behind? So it's kind of like a small low volume pullback where my green horizontal structure is. Yeah, right there, and I'm able to kind of trail behind that, and luckily it didn't come back and stop me out, which it does occasionally do. Actually, not occasionally, it happens a lot. So I need to probably need to work on that a little bit more. But yeah, luckily that little structure held, and it went right to the target there where those offers were being added at.
Nice. John.
Okay. Could you shift to the right? I think you zoomed in just a little too much. I want to show on the right side of his chart. Can you move it over, like slide it over, Bruce? You're not showing the
Yes.
right.
Sorry.
Okay. All right. So the first thing I like to look at are levels, and he has his initial balance low over here, which is being marked. So I always like to look at, okay, what are the key levels, and then I like to look at, well, where is the liquidity. So if we could shift back to the left now, shift back to the left, showing the left side of the chart, you can see where that liquidity level is matching up with this key level. So in real time, that validates my levels, gives me something to work off of. All right. So my numbers are in the sort of the bigger numbers where I'm showing the progression of my thought process. And then he has passive liquidity being filled. That's very nicely done, very nicely observed. And then he has by my number 3, right, exactly. Then we get down to number 4 where we fill that last liquidity down there with a lot of volume that comes into the market. And then his trend line breaks. And he's showing sort of some sideways volume action there. And he does enter. I put okay there, but that's not really my trade. I like to see a break with volume. And it wasn't until we got the volume later on at number 6 that I'm interested in getting long. I want to trade with volume. Exactly. So I'm a little later than he is, but I get a confirmation from the volume. And then my target is up about where he indicated where they were adding on the in the order book up there. I can't see the price.
Where
That
number 8
is
is at.
69.15. So very similar to what he was talking about. The only thing I think I differ in my approach would be waiting for that volume to come into the market, because where he entered, I just didn't see it. And I like to come in with volume. Exactly. Because if you come in with that large buy volume and you can pull your stop right underneath of it, especially in these markets, I'm scared to the death of these markets. So I want to trade when there's urgency. Well, I want a whole bunch of friends trading in the same direction, and that's what I see there. But I think his read here is perfect, very nicely done with the trend line break accumulation trade. And that's it.
David.
Yeah, sure. So everything Evan said, great trade in here. We've seen a lot of these today, albeit we've seen a lot of different things today, and we've seen it all week, David. So I get that. So let me sort of share how I'm trading when this is happening. So the liquidity level at white 4, Bruce, gets filled. Although often we're seeing it, particularly on NASDAQ, it's not getting filled. It's a tease trade. It comes down, it gets close, and then it does a 180 and scoots off. But as soon as we're in that level there, that's exactly where the mouse is. I'm then thinking, okay, are we going to go into it? Are we going to go down below it? So I'm zooming out then, Bruce, on my own chart to see, further down, whether it's 10, 5, 20 handles lower, is there even deeper liquidity? That's one thing I'm doing. I've also got a copy tab, etc. So I'm just getting a view of the battlefield. So there's nothing below. Good. Okay. So we get into that on white 4. I'm then looking to draw a line. Again, you've all seen, or some of them seen my charts. So I'm then looking to say, are we going to start printing those sort of higher lows, and we start to get that week from black 4 to black 3, we're getting a higher low, and then I'm drawing a trend line, drawing those trend lines, and then I'm looking for the volume to like, that's it. Yeah. So we're starting to kiss, and this is what I've been talking to Laura about. You're starting to kiss that line. I've got the volume bars. It's not big. I'm with John. It's not big. So it's a higher risk trade. And that's what I'm using. You've all heard me say it before, my ATM or whatever on Ninja. And I'm looking to get in with a very tight stop. And as you rightly say, John, as soon as you get to then white 6, and we're still on that those higher lows are getting printed. I'm not sure about the higher highs, but we're getting higher lows printed. You get white 6, and we're off to the races.
Yeah.
But I'm looking myself to get in a little bit more, as I'm reiterating, whether it's black 3, but it's higher risk. Agreed. Yeah, lovely. Training,
and I like all that. We discussed this. This was like nice that you brought it up, John, because we talked about this not last week, because I don't think we were here, but the week before, where we were talking about nons trade, and it looks very similar to this, except it actually dipped even further down and picked up more liquidity on the bottom end. And then I think you mentioned that once it picks that liquidity again, and you were considering maybe to get long again if it picked that liquidity for a move up. So like keeping your stops tight, because you could get stopped out, and if it goes down further, it'll probably go down to the next liquidity level and pick that off, and then you would consider another entry at that point.
Yes.
After it picks it.
Yep.
And luckily here, it didn't need to go any lower.
No. And you would get fair warning. You would get a lot of warning here if this thing starts to turn. It'll pause for you. So I love these delta bars, and when they just swell out of nowhere. Yeah, I'm all over that.
Beautiful.
I would find it hard, but so the reason I liked this, I like this that you brought this up, was because it kind of gives us this horizontal structure gives us like defined risk. If you didn't enter, and what I did was, where could you enter here? You could enter at the top of the box, or you can enter at the middle of the box where the high volume is at, or I entered kind of like right in between those two, like on the third quadrant, right there. But so, and then if you placed your stop, let's just say you're looking at the horizontal structure, and you're going to place your stop outside of that structure, because very often it'll go down to the bottom of that structure, and it can hold it, but you still might get picked if you put it right where mine was at. So you might have to go maybe just like another tick or two lower than where I had mine, but just to kind of keep it outside of that structure. But let's say if your stop was outside of the structure, and then you place your take profit at the liquidity, your first take profit at the first level of liquidity, then you have an idea of where you want to of your risk and reward in this scenario. And then in this case, it'd be almost like a 1-to-1, depending on where you entered. So if you entered at the top of that horizontal structure, you had to put your stop outside of the horizontal structure on the bottom, then your risk to reward would be skewed against you. But if you entered in the middle-ish, then at least you would have like a 1-to-1 risk reward. If you entered where you were talking about, John, you put it around 6, you'd want to enter with that volume coming in. Hopefully you'd get it and not get entered at a really bad price. Where would you put your stop here?
I would trail it right underneath of it. I would be really tight underneath of that. Again, it's with the volume coming in. I need to see the volume increasing as well. So it's price and volume. So I hear what you're saying. I just don't want to, these markets are so impulsive that I don't want to be in it unless I'm in on an impulsive move. Because if the volume isn't there, then it could just change impulse in either direction and I get caught. At least if I'm working with volume, to me, that's the key, especially in these markets. That, like I said, I would trail that very closely. And now as soon as you start to get a little bit underneath of you, you get up to break even, then you can cool it a little bit. But initially I would be really close until I got up above a little bit, up to maybe 27.5, and then you can breathe a little easier and kind of work it from there. But I didn't put any take profits on here. I generally would want to be taking profits because that's how I address the risk in these markets. I'm quickly to take profits to finance my risk, and then I'm moving my stop up. But this trend line break accumulation, it's an exercise, and it calls for getting in and getting out. And so that's what I highlighted on this chart. And that's what, it's designed to help you practice holding on to this thing and being able to realize that these targets are real, that are defined by the liquidity. But if I were trading it, yes, I would be taking profits along the way and moving my stop. And that helps me with my MAE because I can quickly harness the risk of participating. But yeah, I would be really close to that, drawing my stop, real close.
Okay. Yeah, that's exactly what I'm doing here. So like if I entered it, and that's the hard part. If you only enter with one contract or if you enter full size, oh, it's hard. Oh, it's hard.
Yeah, it
And I
is
don't quite
hard.
have the statistics for it
But
yet. That's why I still scale as well. I
yeah,
scale. Yeah.
yeah, you
Yeah,
just
same reason. It's very difficult to do all in, all out, but it sharpens your execution pretty good. It hones that execution pretty well. Um, yeah, but you would be executing probably like right where that liquidity got, right at that offer, that offer at
probably.
86.25.
Yep,
Yeah,
that would be a
with
good
that
fill.
volume.
Yeah, 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 yeah. I would. Yep. Yeah, but
Thank you.
Yeah, but that sideways range with no volume, that drives me nuts. I do not want to be in there.
You
Not in these
you
markets.
used to be in that, John.
Yeah, not now. Now.
Not
No,
now.
no, sir. No. I think there's too
No,
much risk
no.
Yeah, yeah.
Yeah.
right now. You have to change. You have to be dynamic with these markets. And so no, it really needs to be showing its cards for me to play.
Yeah.
Yeah, agreed. Um, uh, DNT, I some comments for you here. Again, as always, like your markups are really, really great, really clean, really clear. And that kind of intention, I think, is excellent.
Mhm.
I like what you said about for at least in replay mode, the execution. Don't get sloppy with it, all in and all out, and feel the pain, and feel where to, like, how could I have done better? Because once you start scaling, like you said, it becomes kind of wonky. You've got a lot more leeway in here, and doing that when you're practicing is not a good idea. And you mentioned that, so I just wanted to. It's not for you; it's for others. I just like what you mentioned it. The Let's see what else. I also really, I mean, you've got this thing down, and you like it. It just, the trend line break accumulation, and lovely stuff. What I really like is now the integration of looking for, like you said in the past, well, if I missed it, I'm looking for the low volume pullback. And you're noticing that, like in here, low volume pullback, and you're moving your stop up into, behind that area. So now you're integrating kind of a much more kind of cohesive view of the reversal. Is excellent, I think. And this will allow you to scale in up at some of these areas as well. Take some risk off, put some risk back on, and then take some off again, in some of your areas. I love that you mentioned that, and this will be the next phase in the pilot program as well, for the low volume pullback. But you're integrating it within the whole picture here, from the reversal to a continuation, and then managing your stops along the way. So nicely done.
Thank you. Yeah, it is interesting because if you did, it's easy. Like with John, if let's say John wasn't vigilant at the time and missed the entry at 7, then you just missed the trade. And that if you just have one trade in your pocket, which is the trendline break accumulation, it's easy to be like, oh man, what do I do? What do I do? Well, take a deep breath, gather yourself, and realize just wait, just take some time and wait for the market to develop and continue to show its hand, because it offered a low volume, it created a structure for a low volume pullback. Don't FOMO in, just take your time, take a deep breath, and just kind of reobserve what's going on to the left, and reobserve your plan. What are your targets to the upside if this thing did go into an imbalance, and what's going on the heat map, and you see these offers are getting stacked. So if the market pulls back to this structure and you've regathered yourself, and you can try to identify an entry, you can use that low volume pullback to kind of define your risk. And if you get stopped out, you get stopped out. It's just kind of how it works. You, the volume didn't really help you here on the low volume pullback, unless you think it did. What do you think, Bruce? If you're looking to engage in a low volume pullback entry long.
I mean, there's a little. I mean, it's a little more complex here. I mean, your swing is up here, right, and it's kind of right before this. Well, maybe I don't know if there's like some price action up in here, but it looks like it's up to here, and then you get your pullback, and I guess that makes sense too. Like we look at that area here, like where the sellers came in, right, and then and you get a little bit of a pullback, and then in here, like it depends on many factors. Like this is such a strong move, and it's on such strong volume. Is very typical that you're going to get a very shallow pullback. So just wait for the aggressive buyers to come in again, right? And look for them to do the next impulse move, and then target your high liquidity up here, or just in front of it. And you did. Here you are, right here, and then you moved it again, which was great. So anyway, so that's the context of it. If it's a really strong move, you're going to get a shallow pullback, typically. Now, that doesn't always happen. You might get a really strong, massive, especially in these markets, and it might come all the way back down here.
All the way back, yeah.
Mm-hmm.
And I've shown in the other weeks, Bruce, my market pulse, and I've only got a few running, but those things, depending on your settings, will be making a lot of chatter by now.
Yeah.
When that kicks in, they'll be buzzing away, letting you know if you're falling asleep at the screen, it's time to wake up.
Yeah. Anyway, I love that you're putting it all together at DMT.
Definitely.
Okay, thank you. So I was talking about the low volume pullback potentially at 1350 Eastern on my chart here.
Okay.
1350-ish right there.
Here.
Yeah.
Yeah, because a lot of times, you'll enter at that impulse where you were kind of highlighting, where and it comes all the way back against you. So so I had one impulse up, and then it did a small pullback, and then it impulses up higher again, and it kind of starts to hold this area, and then you get that pullback to that green horizontal structure that I'm talking about there. You actually don't get it really. It holds above it.
Yeah,
right?
it holds above
where
it.
my green structure
You can
is.
see your low volume node here, and it actually held. Typically, you're totally right. Like it usually goes quickly here and then rejects, and then builds and then goes, something like that. But it didn't even touch it. It was such a strong move. It retested this little zone here. That was it.
Yeah, so wait for it to kind of create that little structure, that little microstructure that you could kind of lean on, or at least have some risk defined around that little green horizontal structure for myself.
Yeah. I mean, I mean, it makes sense, right? I mean, this is the second leg. This is where buyers came in again.
Yeah.
Right.
Okay.
So because of that, that's why we're looking for if it's going to come back, it's going to retest these buyers here again, and are they going to support it? Right. In this case, it just came to here. It dipped below it a little bit, but that was it, right? So this is the structure it retested down here, and then it just went back and forth for a while, but kind of hard to read in here. You know, this is really back and forth. I mean, yeah, okay, hindsight, you know, but is that really enough volume? I don't know. But anyway, that's the idea, that to kind of retest where the buyers, you know, some sort of structural kind of area. And we are going to get a pullback because there's just the markets can only take so much at once, right? Tick everything, you know, hits 1,000 pings above it, whatever, but it's going to pull back. Anyway.
Very cool.
Yeah, let's move on.
One last thing about this trade, you know, one of the things I really like about this trend line break accumulation is that ultimately the accumulation that occurred earlier becomes express with a volume push. And so
right.
I'm looking for this. When that happened at my number 6, I was anticipating something to push the market. They've accumulated all this. Are they just going to fizzle, or are they going to go? So oftentimes, you know, I'm kind of poised, ready for this, and that's because of the accumulation that occurred earlier, leading into this trade. That's my favorite thing about this. It's the setup of the accumulation. When is that going to be expressed? Why are they buying all in here? Are they buying the cover, or are they buying to accumulate for a move up? And so the volume push that comes into the market, well, that tells me, okay, they were accumulating here. They want to take this thing for a ride. And so that's why if you add that context, you can kind of be ready for something like this and wait for it to happen rather than just enter when the volume's not there.
Yeah,
Does that make
absolutely. I mean, spot on, John. Because now what you have is you've got these guys at your back.
Yes.
You know, and now these guys are expressing their interest in going for this. Who's going to go against that? You know,
exactly. That's my favorite thing about it. That's where I think that's just a wonderful trade, because you can see it developing, and then you can punch it when it finally gets expressed. I think it was a great selection to teach order flow. Yes, sir.
Thank you. That's because I'm afraid we're going to release this low volume pullback, and everyone's going to go, you know, right over to that. But that's exactly why. So if you understand passive accumulation, and you got this at your back, behind you, and this is as support behind you, and you got these guys coming in, you've got your targets, you know, and just to look for them, and the patience to understand this turnaround transition, and for all these reasons, we put it in here, and I think a lot of people became impatient. A lot have been very, very patient and very good with it, and it's paying off for them. So great stuff. And John, you know, it's really funny because this is very similar to your options trade, except that I would say that because way you're trading is from liquidity to liquidity. You know, you're just looking at an options level down here, and then once you see this. And then you know you're kind of getting, well, your trade is like, you know, you see some of this volume in here, and then you're like, boom, I'm in, you know, and your target is right here. Take some off, and then hold for a runner. But you know, this wasn't really enough volume here, but
and that's not the trade. That's not the
it's not the trade, right?
Right. But you're right. You're absolutely right. Yeah.
But it is very similar in essence. Yeah, great stuff. So that feels good to hear.
Yeah,
I
absolutely.
think there's one more. I thought I saw a second one. I don't know if you wanted to look at that real quick.
We did.
Yeah.
I do have a
sure.
one in there.
We got it here. Hold on.
Yeah, and it's a good one.
To hit on John's topic, that's right. It's these the V reversals happen sometimes, and we try and like people try to nail those, but some of the best trades and the best trades you can, if it's okay to miss those like V reversals, it's because they don't have like great structure, and like if people in the trend line break trying to do a trend line break accumulation are trying to grab these V reversals, and because this setup occurs everywhere, well, some of the it's okay to wait and just wait for your key level to come to you, and wait for it to accumulate, go into balance, and then you see it go into, it's either going into an imbalance or it's already in an imbalance when you can use those low volume pullbacks. I really like that you mentioned that. That's a really good point, because a lot of them, they do have that horizontal structure, and just trying to enter, thinking that it's anticipating that uh, it's gonna reverse, can get you in a lot of trouble, instead of just waiting for it to show you that it's reversing and it's impulsing out of that balance.
Yeah.
Is a lot safer.
Yeah, absolutely. Great comment. I wish Shark was in here because he would probably say the same thing. Like, he got over that trading anticipation and waiting. And I think what helped him a lot was the replay files, because you can wait in the replay file, and you see it enough times, you're like, oh, okay, now I can kind of trust it. And then when you see it unfold, just wait. And he was hitting it. So walk us through this one, and then let's hear from John.
This one was actually like more of it grabbed liquidity, so it's on it's I think on the left side it extended higher. Let me take a look. Yeah, you can kind of see it in the volume profile on the left hand side a little bit, where it moved, looks like it moved up, balanced a little bit, and then it's moving back up again into higher liquidity, and then buyers start to exhaust up here in the second. I think it was like a second leg up here. I think so. The market impulsed up potentially on the far left that you can't see, balanced a little bit. You can see my horizontal structure in hot orange on the left middle, and I didn't extend it out on the left side, the hard left.
Hold
Yeah,
on. Which one?
right there,
This. Okay,
the
gotcha.
hard left, right in the middle. Yeah, I have a horizontal structure on the hard left that I didn't extend out, but it looks like the market probably impulsed up where you don't see it on the chart, balanced a little bit, and then moved up again. So this is, I think we're looking at the second leg here, and that's where it's accumulating. It's like where I have pointing at all these offers, that the market's going up into these offers here, and then it breaks the trend. But as it's pulling into these offers, you already start to see the buyers exhaust. And this is again, like I said, I think is a second extension here
Hmm.
at this point. And so this was a little bit more of an aggressive. This was a bit more of an aggressive entry. So in which case, I just said that I didn't wait for the market to show its hand and impulse out, yet I was anticipating it to move out at this point. Um, after the offers were lifted, and the sellers start to hit the bid, and this was in the consolidation. This was happening. You can actually see the sellers hitting the bid in this consolidation. So sellers are already showing themselves in this consolidation, and luckily it just moved out
Yeah.
from here. And this was already this was, I think, the second leg, like I said.
Yeah. Nice. John.
Okay. So my number one, large number one, we're showing the accumulation being filled to the upside, right up to his VPOC level. And there's more liquidity up there at 69.20, which helps define that level. Again, liquidity comes in and it helps him confirm that that level is key. It's relevant. And then we have some sellers that come into the market in a big way that I have it. I have a rectangle, yellow rectangle around where that, on the volume bars, where that comes in. Right where the
Here?
London guys are closing down. Exactly. All right. So there's your transition point in
That's
terms
right.
of volume. You get a low volume. I'm sorry. You get a little bit of a pullback for an entry. So I thought that was really nicely done. Coming down to target at 68.99. So really pretty straightforward. You know, once that volume comes into the market, that marks the transition between buyers and sellers. And then you had the trend line break with price. You have a little bit of a pullback, very limited risk. His stop placement is perfect, and he comes down.
Yeah, target 1, the bottom of the range, some liquidity, and then you got target 2 and 3 here. So you move this one up.
But for the trade to exercise, again, this is an exercise. You're picking the most predominant level for your target, and I see that as 99. You know, if you had to pick one target, which one would it be? That's the exercise. Yeah. Do you agree, Bruce?
Yeah. I mean, like, I also like to look at the structure as well, and so that doesn't bother me like here, because like a lot of times you see the structure and this was a stop run here. So, maybe you get a deeper pullback at that point. But no, I know this is exactly what you look at, John, from up here. You're looking at it.
Exactly.
You're looking at it up here. You're like, aha, okay. Now I'm just waiting. And that'll be your. Is it your target one? Your target one is should be here though, no?
But like I said, for this exercise, I didn't include any partials. I was just, if you're going to exercise the trade and feel the order flow, then I have a single target, and that would take it down. But you're right. I'm into scaling, and I'm into taking things off, and I'm into bringing my harnessing the risk of the trade. But for the purpose of this program, of the pilot program, I'm picking one exit, and that's at 99.
Got you. Yeah. Nice. Any other comments?
So I'm not looking at volume profile or any of that. I'm just going by order flow, because eventually, really, the program is about learning order flow from this exercise, and then adding to it the little nuances of each trade, and kind of fit it into your program. But to start with, the exercise is to execute this trade as a single.
That's right.
All in, all out. That's
right.
And then you modify from there.
Right.
And I think that's extremely valuable, because if you're used to taking things off, then you really don't feel what it takes to realize the targets that are defined by the liquidity, because it's hard. It's a harder way to do it. Yeah. But he's
you see the structure better with one law, kind of.
Oh, hell yeah!
It's harder with one law. Yeah,
heck yeah.
You have to. So you mentioned a few of those cool things. So one was the London close at 11:30 Eastern. That was one confluence.
Where they run the Hooters,
Yeah, and the I think this was coming out. Was the previous trade the one that we just showed? If you go back to the other trade, I don't know if it was before this one.
That would be after. The other one was after. The other one came in at 1:30.
Okay. So this is a strong reversal. So I think this went up to like the mid, where I would anticipate this level here, plus my higher time frame level to exhaust, plus the time of day, which I know David is going to say the London close here. So that's two things. And the sellers, the accumulation within that horizontal structure was another thing. So there's quite a bit of things going on here, and I think this was like a strong move down to begin with from the morning, and this was just like a pullback into it.
And you can see what they did at the top. There's a couple of stop runs. There's a couple of sweeps up there. They're
on the
nasty
volume
little buggers.
Oh, here.
Yeah.
Okay. Gotcha.
Yeah, and then over one. Yeah, exactly. Especially that one, the first one that he highlighted. That's just a telltale. Yeah, and I'll bet that if you had the sweeps indicator activated, it would show that that's a sweep.
This one's rather nasty too.
That's a nasty little
Yeah.
son of a gun. Yeah,
Yeah.
that killed me for years. It did.
Yeah.
Now I look for them. Now I wait for them. Now that I have Bookmap, now it's
Locked
turn the
and loaded
tables
for them.
on them. But man, for years I struggled with that. Damn, not struggling now, but struggled then.
Yeah. David, jump in, please.
Yeah, sure. I'm probably just going to reiterate quickly what everyone's saying. So great setup, great charts, and all the rest. We haven't seen this for a little while, Bruce. So if we look at 11:15 onwards into that London European close, we've got the selling going on, and then it's David with his WTF. The price keeps going up, which in Forex happens a lot. As we'll talk about, it can happen in all indices, all assets, David, so calm yourself down. But when it's happening in ES, it is to me, a little bit more meaningful that there's something about to change. And often what we do see in those London closes is, I rightly describe it, is traders are bagging it. Those day traders, those institutional day traders, not you and I, they're closing their trades. So you will get that 180 as you can get into the last 30 minutes, 15 minutes, or whatever it might be on that day. So seeing that selling coming in while the price is still going up, and then it sort of fails at a jack of a sort of very poor head and shoulders at the top there, Bruce, at sort of number 4. But very quickly, once we've got the European close out the way, the sellers are still there. They're still coming in. And then the angle that's it. The angle that's coming in between white 4 and black 3 is starting to fade down. And that for me is where I'm looking to get in, just to get in hard because of the time of day, what I'm seeing. I'm trading by the clock really rather than the chart, as you know, but yeah, love it.
Yeah, it's a great one, David, that you bringing up the time of day, because and this is, as I have mentioned to you guys in the pilot program, this is going to be one of the guides: times of day, characteristics, and then what kind of setup you're looking for. So opening range breakout, opening range move. What kind are you going to trade? A reversal? I don't think so. You're going to be trading a continuation, or an aggressive trade. Maybe around 10:30 or so, you're looking for maybe a reversal, but maybe just a pause and then continuation. This is just a picture perfect, David. Here's here's your 11:30, and then everything's being held up.
It is, yeah.
And then now they can release.
And break off we go.
Yeah, exactly. It's really, and so time of day together with this trendline break accumulation, this reversal, beauty. Go ahead, David.
And sorry, as Stephen points out in the chat, some of the ETH trading as well this week, as John knows as well, some great time of day trading. What I've noticed a little bit more this week, but it might just be me, that they're trading early, ahead of 8 o'clock in London. We're seeing some very aggressive trading 10-15 minutes before. I don't know if you've been at the charts, John. People anticipating what's going to happen when London opens. Yeah. But so key for short time of day. So key.
Let's see, there was a couple other things. I think maybe with TD, we can because DNT has been looking at volume profile for a long time.
Yeah.
And what we just covered for TD, and talking about low volume pullbacks and low volume nodes like here. God, hold on a minute. So let's just mark these up. This is where price came up and went through this area, and explored up here, and very little traded down here. and that's where this liquidity is. You can match that up with these traders in here, right? Look at this move up into this area here. Look how thinly traded it is up here.
Really skinny, isn't it?
Right? Look at all of this liquidity up here. Right? So we have all of these sellers up in here. Now you've got you got a whole bunch of confluences in here. You've got all this accumulation on the sell side passively. You have a break of the structure. You start to see the selling coming in, it's totally rejected up here before. It's just not trading up there, right? So here's your time profiles over here. This is like, these are like, it looks like they're double prints, but like, there's not much above there. Look where price came to, right to it, here's your low volume node here. So when we're talking about rejections, this is the same concept. It's just that, it didn't trade through and then come back. It just never got up here again.
Yeah.
So, and another thing, like I was going to mention, I'm sure that DNT feels it. Like when you start to, see this, you got it here on the pullback. But when you start to feel this in here and to start, you can feel it and you're like, this is going to break, Yep. You can, put some of your, take some off in some of your areas, or just, hold, or even, I wouldn't say add, but maybe later. If I don't have a problem with it. If putting on more risk at an area, just think of it like your poker hand. Like you've got, a 2 and a 3, but on the flop you're getting like you've got a full house now.
Absolutely.
So
you're adding with volume.
You're adding with probabilities on your side.
Absolutely.
So like get in. Look. Yeah. Pilot program and everyone else don't get in, but just keep it in mind. As you get better and better, like you'll be able to see this and feel it too. You'll feel that momentum come in here. And this is where David again is like just like notorious. Like, he's like getting in. He's just going along with them.
Knowing the London desks have gone home. That's the thing. They've all gone, so I don't have to worry. I'm just going to worry about you lot on the other side of the pond. I don't worry about the Yanks. I don't worry about the Europeans. They've gone
home. Really, really nice work, DNT.
Yep.
Very nice.
Yep. Very nice work.
Thank you. And that London close just changed for anybody who's listening. I think 3 weeks, David. So 2 more weeks after this week.
Oh, I was going to use the
it's an hour later now. So
it's at 12:30 now, right?
Yeah.
Till the end of the month. Okay.
So until the 29th of March.
It's just annoying. It really is annoying. Well done, Dan. You covered it. It's just I haven't updated my charts. But why I have not updated my charts, Bruce, is because I'm really enjoying. Apologize, it's insulting. Those who haven't got it, is as you've got on this chart, you've got the market profile, and you got 3 time zones. You can have in there. So I can have my London Open in there. I can have what's my 1:30 for the RTH, and then I can have the 11 o'clock when it all kicks off again, or 10 o'clock, I should say, when it all kicks off again. And I'm finding the lines that have been printed from the market profile, Bruce, very useful. I don't know what they mean. I need to spend some time with Tom on that, but they're certainly picking out some levels.
Yeah. We'll get more into it for sure. We kind of have to wait. I want to wait a little bit longer. It's a beta version right now, so they're making improvements on it, and then we will jump into much more depth.
Yes.
Okay, so
and the volume profile is very good as well, because that's something I rely a lot on my Ninja, and that's really good.
Yeah. I mean, they're two different things, and both of them together are really nice.
Yes.
Yeah, I don't even need the developing volume value area on my cloud
Okay.
levels anymore. I can take them off now that you got the
You can use this here.
volume profile on the left. It shows you the value areas right there. It's my cloud levels won't be so cluttered up.
Yeah, right here. Beauty.
Yeah.
Let's see.
Very good. Very good.
Okay, we have there's two more traders I wanted to, or actually three. Like I really wanted to get to, but we've covered Vinfra. We've covered you once before, and Nan, we covered you as well. Both you guys doing really great work.
Very good work.
And but I want to. We've got a new entry in here making some.
Excellent.
And maybe he left. Oh no.
Oh dear.
I was going to go over Tebow, and I don't see him in here now, so he might have left.
Well,
that's too bad. So okay, well then we can go over Vinfra was covered by you, David. So
yes, yeah.
Let's jump over to him.
Get that one out. Perfect. So
Okay.
I've got two charts from him, and that.
Oh, I'm sorry, guys. Hold on just a minute. I'll be right back.
Okay.
So the aggressive order on that last one, just to mention, because somebody had asked before why the aggressive entry instead of waiting for the break and then retest. Well, there was like 4 confluences there, so I just wanted to throw that out there. That's why.
Cool.
Okay, so let's invite him up to the stage.
Okay.
Oh. And Vinfra, if you have your mic on.
Fingers crossed.
Okay, and maybe walk us through your trade.
I think you might be muted.
Yep, still muted, looks like.
I'll shout it out.
Maybe in the lower left-hand corner. There you go. Okay. Now we're at least unmuted in Discord. Okay. Now we still can't hear you. All right. Well, let's see. Why don't you start it off, David?
Yeah,
and,
sure.
As he gets his mic.
Gets it sorted. So great to see some new charts for me, Bruce, on this. So thank you for doing those. Really good. What may help as a tip is, as we've seen on some of the other traders that post, is appreciate the sort of collage of the different shots, but it can be quite easier to zoom in if they're perhaps separate screenshots. But it is quite novel how he's doing it. It'd be good also to see some of the axes, Bruce, because some of them are a bit sort of cut off, so not quite sure on the left and the right axis. Would be good also to know time of day, as you've just heard us all talking about, a lot of passion around the London close and what's happening with there. So that can be very interesting to know what that is. So please look to add that in. Love the checklist in here, Bruce. We've got some great, strong checklisting going on. We've got a similar sort of trade to what we've seen, tonight or this afternoon, Bruce. If I'm my line again for the 4th time, 1 minute we're buying and then we're not buying. Although the selling here is not as aggressive. So the price is scooting up. It's going through all that passive liquidity. We're going up. We get a failure at the top, as he rightly points out. But there's not that aggressive selling coming in. It's a gentle sort of fade back. Whether this was a news, some news went through that we'll sometimes see, Bruce. It scoots off and then it just like a champagne cork just drifts back down to where it started. Although, as John will remind me, we're seeing this so often in the market. But lovely entry. We can see where the break of the double top, as he rightly points out, where he's starting to get in. and then he rises all the way down to a target being filled earlier on. So yeah, really simple trading. Although I reiterate myself, I'm not so convinced because the selling volume is not there. That's the thing for me. John, help me, please.
That's exactly what I was just going to say. I mean, the formation's there, but I'm not seeing that really the volume that come in to precipitate the entry, although it falls back very quickly. So not much to add there.
No.
I'd like to see that. Change, kind of like what we saw before with the NT's chart. Want to see that real transition between the two. The buying obviously does fall off, but you still have a little liquidity above, and I'm not seeing the sell volume come in. So I would be watching this and not trading.
I would be. I mean, it's a lovely trade up. If not that he took it, but we can see there, Bruce, from is that 14 sort of 38, where the green volume bars at the bottom are picking up, and we got the liquidity above. So that as you keep rightly saying, that's a David trade. You know, that's a David trade. As you might take, John, you got the volume coming in. Yeah, let's get on board and take some handles on that. So it would be interesting. We don't, sir. We don't hear you.
No, not yet, Vinfra.
Not yet, sir.
It's too bad.
Yeah.
We got Trading His Life in here though. So if he has any comments.
Why not?
Hey, good afternoon, everybody. Finally.
Hi, buddy. Good to hear you.
Yeah, you can't hear me?
Yeah, we can hear you.
We can. Yeah.
Good afternoon. I was finally able to get in. I don't know. It was not accepted I was hitting accept, but for some reason it was not letting me come up.
Okay.
But yeah, when I saw Vince come on, I had to try to get on because I've been talking to him. Basically, you guys covered it. Well, I've been talking to him in the pilot program about his trades.
Lovely.
Basically, you guys covered it. But the one thing I really wanted to speak to him about is his stop loss. He puts his stop loss a little bit too wide. And I don't see his stop loss on here, and I wanted to see where did he place it on there. Are you able to point that out for me, Bruce?
I don't see it. I see the entry. No, it looks like it's right here. It's right here. Yeah.
Okay, so he has the. Yeah,
it's quite tight in this market.
Yeah. So he has that one. That was put properly. But normally the stop loss is a little bit too wide. So I just wanted to have a conversation with him about that. But that one was actually placed perfectly.
Okay.
So other than that, as far as the trend line break accumulation, the setup, I see where the trend line broke.
Mm-hmm.
I see his entry to the downside. I think he took. I thought the entry was perfect. His stop loss was perfect. I thought it was a pretty good trade. I mean, he went with the volume that's going down, and he exit at the liquidity. So I thought it was he executed that trade pretty well.
Nice. Yeah. As I say, I'm with John. I'm not seeing enough volume earlier on, but when he get into a sort of 1442, I'm just a little bit before that.
Yeah, you see that he has this passive accumulation. There was a strong move to the upside. Then after that, it broke, retested. Then he got in after the retest. So I thought it was a pretty good trade.
Yeah, that's fair.
Yeah, I'm kind of with John and David on this. And Vinfra, you asked me about this during the webinar. I think maybe it was, I don't know if it was Monday or Tuesday, and how to understand the transition from buy side to sell side. And this isn't it. There's just there's just so much buy volume here. I just don't see a transition yet. And if anything, it would be down here, and you're already down at the bottom of the range. So I think this will really help you stay. I mean, this one worked out. It worked out great.
Tuesday.
I would say though, look for that transition in these volume delta bars, and then match that with the structure up above and the liquidity, because the two together are fantastic, because here you get it all clustered, right? This is good. Here you get it within the price structure, so you get two different insights in here. You know, here it's kind of okay. It's very clear that there's a ton of buy volume in here, very, very clear, but it's kind of spread out over this, you know, length here. So you can't, here you get kind of, you get the reference to other areas and the volume, but here you get kind of reference here of like just overall delta. And this is really, really clear that there's ton of buying in here, and I just don't see it yet, that transition. And then once that transition takes place, and if it did, if you see, maybe this would be kind of a start, maybe I'd want to see even more though. And if it was more and you saw it up here, then I think you got something, if that makes sense.
Yeah, that lowers the risk on it, doesn't it, Bruce? That's the thing.
Yeah, because then once it breaks this structure here on the double top, it's going to go. You know, then you've got all that passive accumulation on your side, and you've got the aggressors on your side too. And then I would look for, you know, the move lower. But you made a good trade, and I would say, you know, look further into it about that transition. We'll cover it tomorrow, but it's really, really helpful, and it'll keep you out of a lot of trades, which is great if you don't see the transition. You know, here is a beautiful breakout trade. In fact, I mean, you know, we're not seeing much. It starts to transition in here, and it's really picking up in here. And you've got all of these guys. See how you got all these guys behind you, right? And then these as well. So at that point, as a breakout, you're looking for the high liquidity as the target, because that's where the buyers want to take it. Anyway, that's what I see. I don't know, DNT, or turn it over to DNT, and then maybe other comments here.
Vidfra, sometimes what happens with the microphone is if you close out of Discord and then wait for a minute, or maybe make sure it's like completely closed with the task manager, and then you could bring it back up and your headset and stuff is connected, then it will find your microphone, even though you're testing and it's working on the test, but it's not coming through. Sometimes help closing the Discord and then bringing it back up might help. Exiting via the task manager if you have something, if you want to say something,
or Control R, Dan. I don't know if that would work in Discord, and just refresh it. I don't know.
When I bring up a new device, microphone or something like that, while the Discord is already open, Discord can't really find it, so I have to close it down and bring it back up with the device already connected, and then it's able to grab it better. Even though he said it's working in the test, it's something that works for me, closing it and then bringing it up. Scroll, if you could scroll up a bit, please. So this is really cool. What's the key levels is what I would ask. Huge rip up to it, so an aggressive move up to whatever the key level that is, and then it pulls back. And how I looked for Tuesday. I'm looking on Tuesday, and I don't think that this is the structure from Tuesday, unless it is. Maybe it is. Doesn't quite look like it to me though. I don't know if there's a date on here, but either way, it rips up, and then it pulls up to this key level, and it tries to retest it again. So you don't really see the sellers so this is not a good example. Like everybody has already mentioned that if you're looking to look for a transition from like buyers to sellers, you don't see it here, and you probably won't see it here. So the opposite question. So I'm not saying that you're trying to justify this trade or anything like that. What I'm trying to say is that this is a different kind of trade that you're looking at here. This is a trade where you would look at how are these buyers coming back to retest that level, and they're not coming back as hard, and they're not coming back that hard. They try to retest the level and they couldn't do it. And then the next question is well, where are you going to enter on this? And
for sense the 9th of March in the chat there.
9th of March. So yeah, this is like it just on the retest it fails. The buyers couldn't continue that momentum. They couldn't continue that. So like you won't see that transition here really. I mean, if you saw the transition here, that would be nice. But in this type of scenario, I would look to see how the buyers are coming back to retest it in this case. And they did kind of come back, but they didn't come back as heavy as they did to the left, and they didn't get to the high either. So if you shorted, there's a few ways to short. I would say though that the entry here is really late. Ideally, you would get a pullback up to somewhere to that horizontal structure there. If you were to put a box on that, if you were to put a box on that, hopefully you would get some type of pullback to this.
A small one
somehow. Here. Exactly. Yeah, and it didn't quite break that previous swing low, so you would kind of be shorting in the pocket there, assuming that it's going to go down. But that's a good one though. It's not bad. If you shorted the low of your box, that's not too bad either, because you already know what happened. You see what happened here. The buyers slammed it up to the key level, and then they tried to retest it again, and they couldn't retest it. The buyers really didn't kind of come in. So it's a little bit different if you're trying to make a trendline break accumulation out of this. It's a little bit different. You don't quite see that transition, but you do realize that you see that heavy buying and you don't get it again, and you don't retest that high. A different type of trade here, but it's pretty nice structure. I like everything. I like that you brought it up here. I don't really know what you mean on the bottom left picture. You put double top. I don't think that's a double top. Is it? I don't think that's a double top. And then you wrote an orange break of double top, which I don't think that's a double.
These two here. I think.
That's not. Yeah, that's not. I don't think that's a double top.
What? Between this. Sorry. Hold on.
Pretty close.
Yeah, if they try to retest
and this one is a double top. No.
They try to retest the high. If they retested the high, that would have been a double top, right? Like if they reached it, but they didn't. That's a failed retest. That's not quite like a double top, is it? Anyways, I'm trying to just say that I don't think, in my opinion, that's a double top. I think that's a failed retest. But where you put break of double top, it really breaks that structure, and that's breaking that previous swing low. That's a pretty decent entry as well. But ideally you'd want to pull back, and you just didn't get it here. They cranked that thing down. So I might have missed this short here, which is okay to miss, and because I have gotten a good failed retests before like this, anticipating it to go down and I get stopped. And this happened not too long ago, where I thought it was going to go down, but it didn't. It kept going higher. And it happens. You just have to take your shot.
You do. Yeah.
Yeah. Okay.
Can I say something?
Yeah. And it looks like he might have gotten his mic, but go ahead. Trading his life.
This question is for you, Bruce, John, and David, because we're talking, and DNT, because we're talking about the transition and from buyers to sellers. Now, exactly where he put his stop loss, that is where I see the transition took place. As you can see, you got your big green bubble, then price rotated for a little bit, and then you see the structure right before he went in. There was buyers was not able to take that back up, and then it went down. Then he got in right after that, and then look at the volume started to come in. So I think the transition happened right there from buyers to sellers.
Okay.
And he placed his stop loss well. I mean, I can be wrong, but this is a question for all three of you guys, or for you guys, because y'all saying I didn't see the transition, and I'm seeing the transition. As you see, it went up, came back down, went up again, created a it's not a double top, like DNT said, it was a fail. Then it went back up. Then again, price rotated right where he has his stop loss. And look at that little green bubble right where he rose short, right below it, Bruce. Right, that little green dot, really, really small. That's telling me buyers are out of gas. The sellers took over.
This one up
Am
here?
I reading this? No, down.
The one you're on, Bruce.
Right there. Just go up. Right next to it. Right, go up, Bruce. Go up. Right there. Over
This
a little
one?
bit. No,
Yeah.
down. You're just right there.
There's
down.
one right here.
And then the one right above it, a little tiny green one right above it.
Oh, this tiny one here. Okay,
Yes.
I
Look,
see it. Got you.
Look at the sellers that's the transition right there. As you can see, the sellers are becoming more and more aggressive, and the buyers are not.
Yeah, I can't argue with that. I think
This is
I would I think it's a good point. Trading is life. I think what I'm talking about is like kind of just the bigger picture transition. Within this structure in here, I agree with that. Like here's your failure, your exhaustion, and then what do you have down here? You have sellers. So that is true. You can't deny that. And you can target here, and or higher liquidity down at lower levels. But yeah, I see all of where these buyers came in, and where they might buy again. It's not my setup.
Because it could be a low volume pullback before you know it.
Yeah, exactly. It could be.
You've got it's because you've got the liquidity above the words double top. But you're right. Trading's alive. I think back, Bruce, when we had Trader HE with us 3-4 weeks ago, and he was taking, I might be wrong or right, Bruce, but trades like this right in the trenches where I wouldn't go near that, and John wouldn't go near that either. But Trader HE, full respect, he was right in there, knife fight in this middle action area, and scalping away. Brilliant.
I mean, that's like a C trade, but I mean, the ideal trade would be right there, right at the liquidity. You see where the buyers brought it back up and fell, then it went right back down. That's the A+ setup. But I was just going to say, I could see his point where the transition took over from buyers to sellers.
Yeah, that's fair. Can't argue against that. Yeah.
If I could butt in, I see what you're saying. Trading is life. I would say that I see it now that you mention it. That's like that horizontal structure, that low volume, and he entered like on a low volume pullback.
That's right. Yeah.
Exactly.
Yeah. And this is going to be kind of like a scalp to that.
Exactly. It's like a scalp.
Because the market's in an imbalance, so you missed the transit. You might have missed that transition, like going into the imbalance, the short, which is okay, but he's capitalizing on the market's already in an imbalance, and he's looking to capitalize on a little bit, just grab a little bit more of the move. And I mean, your target's really close to you, though. It's right there at that liquidity.
Yeah, I wouldn't, but I just saw his point. But you know what I mean? With the liquidity right there, it wouldn't make any sense to take that trade. The risk to reward, it wouldn't be worth it. But after, I just wanted to see, because I saw where the transition, because I remember he asked that question, I think on Tuesday he asked that during the webinar, Bruce.
Yeah.
That's a
the transition. So
that's a good point, man. Yeah, good. Glad you pointed that out.
Yeah, I think
As-
you got a point here. If I can just kind of edge in DNT like for a second about, you know, I've been talking about kind of bigger picture of transition in the volume delta bars down below, and what you're pointing out here is the structure and the delta, right? Because in here on a pullback and you see exhaustion or very little buying and it can't hold, that's telling you a lot, you know, for a scalp. I mean, or for a move lower. It rejected up here. And then if sellers come in down here at this little structural, it's hard to see this, I'm sorry, but this little structural area in here, and you see more sellers, boom, I would look for it to come down into these areas. Absolutely. It rejected here. There's no one interested in trading it. And this is the volume within the structure. I like to kind of see both, though, to be honest. I mean, I like to see it in the structure and in the volume bars.
And the volume, yeah.
Yes.
So, but you know, I have taken many of these more than I care to admit. Anyway, a pity, Vinfra, couldn't catch you on the mic here.
Yeah.
But maybe next time. Guys, we're over our time limit, and we got to a few of you. We went over some good stuff. Others are putting together their spreadsheets, which is great. It's the way to go. I mean, you know, look, we're covering you guys because you're you know, putting it all, and you're in the pilot, many are in the pilot program already, so you're already making and journaling your trades. Just all you have to do is copy the link in Discord and put it into your spreadsheet, and you know, and put it into the academy as well, and then just copy that link and we'll go over it. So you might as well. And it's too bad Thibaut was, I was looking forward to going over it with him because he did exactly that. And he's been doing great. He had some great stuff. So next time. Let's see. Whose turn is it today? I think back to trading is life, maybe? Is it?
I think it is.
Yeah, is it trading is life?
Yeah.
Take us out.
I just want to say how important it is to you guys are posting, but you gotta attend the academy. If I sound like a little bit like I know what I'm talking about, it's due to the fact that I attend the academy. All these things I learned through the academy. I can't stress it enough. Please post and try to attend these courses. This is how you're gonna learn. Hearing the feedback, reading it is not the same as hearing it and hearing different point of views from different coaches. So please do your best. Try to make these at least once or twice a month. I don't. Everybody's schedule is different, but you have to attend these. This is part of the learning process as well. That's it. Thank you.
Wise words, sir. Wise words.
All right. Thank you guys for another great meeting, and we'll catch up next week.
See you next week.
Yeah.
Thanks.
Bye.
Cheers, guys. Take care. Bye-bye.